Let's get ready for the Illinois real estate exam with 100 questions on state-specific laws, principles, practice, and more. And don't miss what's happening in the bottom corner. It'll be key to your prep. We'll tell you how in a minute. Now let's get started.
Illinois real estate law and practice. The Illinois Department of Financial and Professional Regulation, IDFPR. What is the primary responsibility of the Illinois Department of Financial and Professional Regulation in relation to real estate practice? Is it A, to oversee the issuance and renewal of real estate licenses? B, to handle financial disputes between real estate agents and clients? C, to manage federal housing assistance programs? Or D, to promote real estate transactions within Illinois? The answer is A, to oversee the issuance and renewal of real estate licenses. The IDFPR oversees the issuance and renewal of real estate licenses in Illinois, ensuring that professionals meet the required legal and educational standards. What is the process for a real estate professional to appeal a disciplinary action taken by the Illinois Department of Financial and Professional Regulation? Is it A, directly petition the Governor of Illinois? B, file an appeal with the Real Estate Division of the IDFPR? C, request a formal administrative hearing? Or D, submit a complaint to the Illinois Attorney General? The answer is C, request a formal administrative hearing. To appeal a disciplinary action taken by the IDFPR, a real estate professional must request a formal administrative hearing. This allows for a review and determination on the disciplinary action.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsey.ai for immediate help and a free study session with Birdsey, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
How does the IDFPR ensure compliance with real estate licensing regulations? Is it A, by conducting random audits and investigations? B, by overseeing all real estate transactions? C, by offering financial incentives for compliance? Or D, by managing residential property databases? The answer is A, by conducting random audits and investigations. The IDFPR ensures compliance by conducting random audits, inspections, and investigations into real estate practices within Illinois to uphold legal standards. Which of the following actions can the IDFPR take against a real estate professional for non-compliance with licensing regulations? Is it A, revoking the license? B, issuing a verbal warning? C, requiring additional education? Or D, assigning community service? The answer is A, revoking the license. The Illinois Department of Financial and Professional Regulation can take several disciplinary actions, including revocation of a license for non-compliance with real estate licensing regulations. This ensures adherence to industry standards and protection for consumers. What action can the IDFPR take if a real estate professional violates licensing regulations? Is it A, revoke the professional's real estate license? B, impose fines exceeding state legal limits? C, incarcerate the violating professional? Or D, award monetary compensation to affected clients? The answer is A, revoke the professional's real estate license. The IDFPR can revoke a real estate license as one of the disciplinary actions it takes against professionals who violate licensing regulations in Illinois. Illinois licensing and regulation. What is the term length for an Illinois real estate broker's license? Is it A, 1 year, B, 2 years, C, 3 years, or D, 5 years? The answer is C, 3 years. In Illinois, a broker license is valid for 3 years, after which it must be renewed. This ensures that brokers stay current with legal and market changes. Who has the authority to suspend or revoke an Illinois real estate broker's license? Is it A, Illinois Department of Revenue, B, Illinois Department of Financial and Professional Regulation, IDFPR, C, U.S. Department of Housing and Urban Development, or D, National Association of Realtors, NAR? The answer is B, Illinois Department of Financial and Professional Regulation, IDFPR. The Illinois Department of Financial and Professional Regulation oversees real estate licensing and has the authority to suspend or revoke licenses for violations. What must be reported to the IDFPR if a broker is convicted of a felony? Is it A, nothing, unless it impacts their business? B, the conviction must be reported within 10 days. C, the conviction only needs to be reported during license renewal. Or D, only financial crimes need to be reported. The answer is B, the conviction must be reported within 10 days. Illinois real estate brokers must report any felony conviction to the IDFPR within 10 days of the conviction. Failure to do so can result in disciplinary actions. What is required for a licensed broker to open their own real estate firm in Illinois? Is it A, a minimum of 1 year's experience as a broker, B, completion of additional business management courses, C, obtaining a managing broker license, or D, a sponsorship from another broker? The answer is C, obtaining a managing broker license. To open their own real estate firm in Illinois, a broker must obtain a managing broker license, which involves meeting additional experience and education requirements. What must a managing broker do if they terminate a sponsoring relationship with a broker in Illinois? Is it A, report the termination to the local real estate board, B, notify the Illinois Department of Financial and Professional Regulation within 24 hours, C, provide a 30-day notice to the broker, or D, submit a formal request for license suspension? The answer is B, notify the Illinois Department of Financial and Professional Regulation within 24 hours. Managing brokers in Illinois must notify the IDFPR within 24 hours if they terminate a sponsoring relationship with a broker. This ensures license status changes are promptly updated. Which entity oversees the licensing and regulation of real estate professionals in Illinois? Is it A, Illinois Department of Financial and Professional Regulation, IDFPR, B, Illinois Real Estate Board, C, National Association of Realtors, or D, Illinois Housing Development Authority? The answer is A, Illinois Department of Financial and Professional Regulation, IDFPR. The Illinois Department of Financial and Professional Regulation oversees the licensing and regulation of real estate professionals in Illinois. What is the required continuing education hours for Illinois real estate brokers during each renewal period? Is it A, 12 hours, B, 18 hours, C, 24 hours, or D, 36 hours? The answer is B, 18 hours. Illinois real estate brokers are required to complete 12 hours of continuing education every 2 years to renew their licenses.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsey.
Fair housing laws in Illinois. Which of the following is prohibited under Illinois fair housing laws? Is it A, charging different rent prices based on race, B, offering discounts to first-time renters, C, providing amenities for tenants with disabilities, or D, hiring a real estate broker? The answer is A, charging different rent prices based on race. Charging different rent prices based on race is prohibited by Illinois fair housing laws to ensure non-discriminatory practices in renting properties. What is a landlord required to do under Illinois fair housing laws if a tenant has a disability? Is it A, refuse to rent the property, B, make reasonable accommodations, C, charge extra rent for accommodations, or D, ignore the disability? The answer is B, make reasonable accommodations. Under Illinois fair housing laws, landlords are required to make reasonable accommodations for tenants with disabilities to ensure fair and equal access to housing. Which group is not protected under Illinois fair housing laws? Is it A, race, B, sexual orientation, C, age, or D, religion? The answer is C, age. Illinois fair housing laws protect against discrimination based on race, religion, and sexual orientation, among other categories. However, age is not explicitly addressed outside of senior housing contexts. What must a landlord do if accused of discrimination under Illinois fair housing laws? Is it A, terminate the lease immediately, B, cooperate with the investigation, C, ignore the accusation, or D, evict the complainant? The answer is B, cooperate with the investigation. Upon being accused of discrimination, a landlord must cooperate with investigations by entities like the Illinois Department of Human Rights to resolve the matter lawfully. Under Illinois fair housing laws, which is considered unlawful? Is it A, offering to refurbish a unit for a new tenant with a disability, B, refusing to rent to a family with children, C, advertising amenities like a community pool, or D, requiring a security deposit? The answer is B, refusing to rent to a family with children. Under Illinois fair housing laws, it is unlawful to refuse to rent to families with children, ensuring non-discriminatory access to housing for all familial statuses. Under Illinois fair housing laws, what is the time frame within which a complaint must be filed after an alleged discriminatory act? Is it A, 30 days, B, 6 months, C, 1 year, or D, 2 years? The answer is C, 1 year. Under Illinois fair housing laws, a complaint must be filed within 1 year from the date of the alleged discriminatory act. Which of the following is a protected class under the Illinois Human Rights Act in relation to housing? Is it A, age, B, sexual orientation, C, marital status, or D, education level? The answer is B, sexual orientation. The Illinois Human Rights Act includes sexual orientation as a protected class in relation to housing, ensuring this group is safeguarded against discrimination. Real estate contracts in Illinois. Which of the following is a necessary component for a real estate contract to be valid in Illinois? Is it A, the buyer must be a resident of Illinois, B, the contract must be in writing, C, the contract must be notarized, or D, both parties must be licensed real estate agents? The answer is B, the contract must be in writing. In Illinois, the statute of frauds requires that all real estate contracts be in writing to be enforceable. This legal requirement helps ensure clarity and prevent fraud in property transactions. What is the purpose of earnest money in a real estate transaction in Illinois? Is it A, to cover the down payment, B, to secure financing from a lender, C, to demonstrate the buyer's serious intent to purchase the property, or D, to pay for closing costs? The answer is C, to demonstrate the buyer's serious intent to purchase the property. Earnest money is provided by the buyer as a demonstration of their serious intent to buy the property. It establishes trust in transactions and is typically applied toward the purchase price upon closing. In Illinois, what must happen if a buyer wishes to terminate a real estate contract under the Attorney Review Clause? Is it A, Both parties must agree in writing to the termination. B. The buyer must provide written notice within the specified period. C. The buyer must demonstrate a legitimate legal reason for termination. Or D. The buyer must forfeit their earnest money deposit. The answer is B. The buyer must provide written notice within the specified period. The attorney review clause allows either the buyer or seller to terminate the contract within a specified period, generally 5 business days, by providing written notice. It protects both parties during the review. Which type of deed is commonly used to convey property in Illinois and offers the greatest level of protection to the grantee? Is it A. Quitclaim deed, B. Special warranty deed, C. General warranty deed, or D. Bargain and sale deed? The answer is C. General warranty deed. A general warranty deed is preferred in Illinois as it provides the highest level of protection to the grantee by guaranteeing the title against defects throughout the property's entire history. What is required for a real estate contract to be enforceable under Illinois law? Is it A. A verbal agreement between the parties, B. A detailed property appraisal, C. An offer, acceptance, and consideration, or D. A home inspection report? The answer is C. An offer, acceptance, and consideration. Under Illinois law, for a real estate contract to be enforceable, it must meet the fundamental contract elements: offer, acceptance, and consideration. These ensure mutual agreement and legal obligation between the parties. What type of contract clause allows for the termination of a real estate contract if certain conditions are not met in Illinois? Is it A. Contingency clause, B. Indemnity clause, C. Escalation clause, or D. Default clause? The answer is A. Contingency clause. A contingency clause in Illinois real estate contracts allows parties to terminate the contract if specific conditions are not met, protecting both buyers' and sellers' interests. What must be included in an Illinois real estate contract to comply with the statute of frauds? Is it A. Verbal agreement, B. Written agreement, C. Handshake agreement, or D. Oral promise? The answer is B. Written agreement. The statute of frauds in Illinois requires real estate contracts to be in writing to be enforceable, ensuring that essential terms are documented and agreed upon.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Disclosures required by Illinois law, e.g. radon disclosure, lead-based paint disclosure. What is required to be provided to buyers according to Illinois radon testing disclosure laws? Is it A. A copy of the previous owner's radon testing results, B. An Illinois radon disclosure form if the home is tested, C. A certification of radon remediation, or D. A statement that no radon test has been conducted? The answer is B. An Illinois radon disclosure form if the home is tested. Illinois law mandates that sellers provide an Illinois radon disclosure form if radon testing has been conducted on the property. This aims to inform potential buyers about any known radon hazards. What information must be disclosed under the Illinois lead-based paint disclosure law? Is it A. The year the property was built, B. Any known presence of lead-based paint, C. Inspection reports from the last decade, or D. The current owner's lead hazard insurance policy? The answer is B. Any known presence of lead-based paint. Under Illinois law, sellers must disclose any known information on the presence of lead-based paint and hazards. They are also required to provide an EPA-approved lead hazard information pamphlet to buyers. When must a seller provide the radon disclosure form in Illinois? Is it A. At the open house, B. Before accepting an offer. C. Before or at the time of entering into a contract. Or D. After the closing of the sale. The answer is C. Before or at the time of entering into a contract. In Illinois, the Radon disclosure form must be provided to buyers before or at the time they enter into a binding contract. This ensures that buyers are aware of any radon testing and results before completing the purchase. Which type of property sale requires compliance with the Illinois lead-based paint disclosure law? Is it A. Residential properties built before 1978? B. All commercial properties? C. Any property with more than 10 units? Or D. Properties listed as historical landmarks? The answer is A. Residential properties built before 1978. The Illinois lead-based paint disclosure law applies to residential properties built prior to 1978. Sellers must inform buyers about any known lead-based paint and provide a lead hazard information pamphlet if applicable. Who is responsible for ensuring compliance with radon disclosure laws in Illinois? Is it A. The home inspector? B. The buyer's real estate agent? C. The seller or the seller's real estate agent? Or D. The local government? The answer is C. The seller or the seller's real estate agent. In Illinois, it is the responsibility of the seller or the seller's real estate agent to ensure that radon disclosure requirements are met and the appropriate forms are provided before entering a binding contract with the buyer. What must be included in the Illinois lead-based paint disclosure? Is it A. A report of a recent paint inspection? B. A brochure about lead-based paint hazards? C. Detailed records of all paint present in the property? Or D. Confirmation that no lead-based paint exists on the property? The answer is B. A brochure about lead-based paint hazards. The Illinois lead-based paint disclosure requires that buyers and tenants be given the federal pamphlet Protect Your Family from Lead in Your Home. This is to ensure they are aware of potential hazards. Under Illinois law, what information must be included in a radon disclosure form provided to potential buyers? Is it A. A description of the radon testing procedure? B. The results of radon tests conducted within the past 5 years? C. An option for the buyer to waive radon inspection? Or D. Contact information for local radon mitigation services? The answer is B. The results of radon tests conducted within the past 5 years. The radon disclosure form in Illinois requires sellers to inform buyers of any known radon hazards and provide results of radon tests conducted within the past 5 years. Transfer of title in Illinois. In Illinois, which type of deed offers the greatest protection to the buyer? Is it A. Quitclaim deed? B. Special warranty deed? C. General warranty deed? Or D. Bargain and sale deed? The answer is C. General warranty deed. A general warranty deed assures the grantee of protection against any claims to the property from prior owners, offering the utmost security for a buyer. Who is responsible for ensuring that property taxes are current before the transfer of title in Illinois? Is it A. Buyer? B. Seller? C. Title company? Or D. Real estate agent? The answer is B. Seller. In Illinois, sellers are generally required to pay all due property taxes up to the closing date, ensuring the buyer receives a property free of tax liabilities. What is the primary function of recording a deed in Illinois? Is it A. To validate the sale contract? B. To provide constructive notice of the property transfer? C. To determine the property taxes? Or D. To initiate zoning changes? The answer is B. To provide constructive notice of the property transfer. Recording a deed gives constructive notice, making the ownership change public and protecting buyers against any undisclosed prior claims or interests in the property. In Illinois, which document is used to transfer ownership of property upon the death of the owner when there is a will? Is it A, living trust, B, executor's deed, C, statutory warranty deed, or D, sheriff's deed? The answer is B, executor's deed. An executor's deed is issued by the executor of an estate in Illinois to transfer property ownership in accordance with the deceased's will. When transferring title in Illinois, what is the purpose of obtaining a title insurance policy? Is it A, to satisfy all property tax obligations, B, to protect against defects in the property title, C, to guarantee the property is free of physical damages, or D, to ensure compliance with building codes? The answer is B, to protect against defects in the property title. Title insurance in Illinois is used to protect the buyer and lender from defects in the title, ensuring that the transfer of property ownership can occur free of discrepancies. Which document is used to transfer property ownership when the owner dies intestate in Illinois? Is it A, warranty deed, B, quitclaim deed, C, administrator's deed, or D, trust deed? The answer is C, administrator's deed. In Illinois, an administrator's deed is used to transfer property when the owner dies intestate, meaning without a will. The court-appointed administrator handles the distribution. Escrow in Illinois. What is the primary function of an escrow holder in an Illinois real estate transaction? Is it A, to negotiate terms between buyers and sellers, B, to maintain impartial custody of funds and documents, C, to appraise the property's value, or D, to ensure the property is in good condition? The answer is B, to maintain impartial custody of funds and documents. In Illinois, the escrow holder acts as a neutral third party who maintains custody of all funds and documents involved in the real estate transaction until closing. Which entity typically holds escrow funds in an Illinois real estate transaction? Is it A, the buyer's attorney, B, the seller's agent, C, a title company or escrow agent, or D, the Illinois Real Estate Department? The answer is C, a title company or escrow agent. Escrow funds in Illinois transactions are generally held by a title company or a designated escrow agent to facilitate and safeguard the transaction. Under Illinois law, when is an escrow account typically required? Is it A, when the buyer is paying in cash, B, during any real estate transaction involving a mortgage, C, only for commercial real estate transactions, or D, when the property is sold in as-is condition? The answer is B, during any real estate transaction involving a mortgage. In Illinois, escrow accounts are usually required when the transaction involves a mortgage, as they help manage funds throughout the process. Who is responsible for ensuring that all conditions of an Illinois escrow agreement are met before closing? Is it A, the buyer's real estate agent, B, the escrow holder or agent, C, the seller's attorney, or D, the Illinois Real Estate Department? The answer is B, the escrow holder or agent. The escrow holder or agent bears the responsibility for ensuring that all conditions specified in the escrow agreement are satisfied before closing the transaction. What happens if a real estate transaction in Illinois does not close and the escrow instructions are not met? Is it A, the buyer automatically receives a refund from the seller, B, the escrow holder will disperse funds according to the original instructions, C, the seller keeps the escrow funds, or D, the Illinois Real Estate Department intervenes to decide the outcome? The answer is B, the escrow holder will disperse funds according to the original instructions. If an Illinois real estate transaction fails to close, the escrow holder will distribute funds according to the escrow instructions or as directed by court orders, ensuring proper legal compliance. What is the role of an escrow agent in Illinois real estate transactions? Is it A, to represent the buyer exclusively, B, to disperse the funds and documents upon successful completion of escrow terms, C, to provide legal advice to both parties, or D, to appraise the property? The answer is B, to disperse the funds and documents upon successful completion of escrow terms. The escrow agent's responsibility includes handling and dispersing funds and documents upon verifying that all conditions of the contract have been met. They operate neutrally and do not provide legal advice. Under what conditions can an escrow in Illinois be canceled? Is it A, when both parties agree in writing, B, when the buyer decides to back out, C, automatically if the property fails inspection, or D, when the escrow agent suspects fraud? The answer is A, when both parties agree in writing. In Illinois, escrow can be canceled only if all parties involved, buyer, seller, and sometimes others, such as lenders, agree in writing. This ensures mutual consent is maintained in the process.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Illinois real estate taxes. What is the primary purpose of the Illinois Property Tax Code? Is it A, to regulate rental income, B, to determine the amount of property tax due, C, to manage property transfers, or D, to oversee real estate brokerage practices? The answer is B, to determine the amount of property tax due. The Illinois Property Tax Code outlines the procedures for assessing and collecting property taxes, ensuring that local governments have the necessary revenue for public services. Which governmental body is responsible for the initial assessment of property value in Illinois? Is it A, Illinois Department of Revenue, B, County Clerk's Office, C, County Assessor's Office, or D, City Council? The answer is C, County Assessor's Office. In Illinois, the County Assessor's Office is tasked with assessing the value of properties within the county to determine property taxes owed by property owners. What is a homestead exemption as it relates to Illinois property taxes? Is it A, a tax deduction for business properties, B, a reduction in property tax for qualified homeowners, C, a waiver for all property taxes for seniors, or D, a credit for first-time homebuyers? The answer is B, a reduction in property tax for qualified homeowners. In Illinois, the homestead exemption allows eligible homeowners to reduce the taxable value of their primary residence, offering financial relief by decreasing their overall property tax burden. What happens when a property owner in Illinois fails to pay property taxes? Is it A, the property is immediately seized by the state, B, a lien is placed on the property, C, the property owner loses their voting rights, or D, the property is sold at a discounted rate? The answer is B, a lien is placed on the property. In Illinois, if a property owner does not pay property taxes, a tax lien is placed on the property. If the taxes remain unpaid for a certain period, the property may be sold at a tax sale. Which document provides the guidelines and regulations for property taxation in Illinois? Is it A, the Illinois Mortgage Act, B, the Illinois Property Tax Code, C, the Illinois Realty Act, or D, the Illinois Property Transfer Act? The answer is B, the Illinois Property Tax Code. The Illinois Property Tax Code contains the regulations, procedures, and guidelines for property taxation, including assessment methods, exemptions, and tax collection processes. What type of property in Illinois typically qualifies for the general homestead exemption? Is it A, rental property, B, commercial property, C, primary residence, or D, vacant land? The answer is C, primary residence. In Illinois, the general homestead exemption provides tax relief to homeowners for their primary residences, reducing the assessed value on which property taxes are based. Which of the following factors primarily determines the property tax rate in Illinois? Is it A, market conditions, B, school district funding needs, C, population density, or D, proximity to urban centers? The answer is B, school district funding needs. In Illinois, local school district funding needs are a major factor in setting property tax rates, as real estate taxes are a primary source of funding for public schools. Illinois real estate finance. Loan fundamentals. Which type of loan is guaranteed by the Department of Veteran Affairs? Is it A, conventional loan, B, Federal Housing Administration, FHA loan, C, a Veterans Affairs VA loan, or D, United States Department of Agriculture, USDA loan? The answer is C, a Veterans Affairs VA loan. VA loans are mortgages guaranteed by the U.S. Department of Veteran Affairs, VA, and are available to eligible veterans or their surviving spouses. Which term describes a loan that is not insured or guaranteed by a government agency? Is it A, conventional loan, B, Federal Housing Administration, FHA loan, C, a Veterans Affairs VA loan, or D, subprime loan? The answer is A, conventional loan. Conventional loans are private sector financing that isn't insured or guaranteed by government agencies like FHA or VA. What does the term amortization refer to in real estate finance? Is it A, the process of securing a loan with collateral, B, the process of paying off a loan through periodic payments, C, the approval of a loan by a financial institution, or D, the reduction of loan term through refinancing? The answer is B, the process of paying off a loan through periodic payments. Amortization refers to the gradual repayment of a loan in regular installments of principal and interest over a specified period. Which entity is primarily responsible for determining the interest rate on a real estate loan? Is it A, the borrower, B, the lender, C, the government, or D, real estate agents? The answer is B, the lender. Lenders set the interest rates on real estate loans, taking into account various factors, including the borrower's credit score and economic conditions. What is the primary purpose of private mortgage insurance, PMI? Is it A, to protect the lender in case of borrower default, B, to increase the loan amount available to the borrower, C, to lower the borrower's interest rate, or D, to provide insurance on the property itself? The answer is A, to protect the lender in case of borrower default. Private mortgage insurance, PMI, is required on conventional loans when the borrower makes a down payment of less than 20% to protect the lender in case of default. Which document outlines the terms and conditions of a loan agreement, including the interest rate and repayment schedule? Is it A, promissory note, B, deed of trust, C, mortgage, or D, loan estimate? The answer is A, promissory note. The promissory note is the primary document outlining the borrower's promise to repay borrowed funds, detailing the loan's interest rate, payment schedule, and terms. Loan types. Which type of loan is guaranteed by the Department of Veterans Affairs? Is it A, Federal Housing Administration, FHA loan, B, conventional loan, C, Veterans Affairs VA loan, or D, United States Department of Agriculture, USDA loan? The answer is C, loan. VA loans are designed to offer long-term financing to eligible American veterans or their surviving spouses. They are part of a benefits program guaranteed by the Department of Veterans Affairs. What is the minimum down payment required for an FHA loan? Is it A, 0%, B, 3.5%, C, 5%, or D, 10%? The answer is B, 3.5%. The Federal Housing Administration, FHA, requires a minimum down payment of 3.5% of the home's purchase price for borrowers with a credit score of 580 or higher. Which type of loan typically has the most stringent credit requirements? Is it A, Federal Housing Administration, FHA loan, B, Veterans Affairs VA loan, C, conventional loan, or D, United States Department of Agriculture, USDA loan? The answer is C, conventional loan. Conventional loans are not guaranteed or insured by a government agency, so lenders often set stricter credit requirements to mitigate risk. Which of the following loan types is specifically designed for rural and suburban homebuyers? Is it A, Federal Housing Administration, FHA loan, B, United States Department of Agriculture, USDA loan, C, Veterans Affairs VA loan, or D, conventional loan? The answer is B, loan. USDA loans, also known as rural development loans, are backed by the United States Department of Agriculture and are intended to assist low to moderate income buyers in rural and some suburban areas. Which type of loan can be partially forgiven if the borrower defaults? Is it A, Federal Housing Administration, FHA loan, B, Veterans Affairs VA loan, C, conventional loan, or D, United States Department of Agriculture, USDA loan? The answer is B, Veterans Affairs VA loan. VA loans can offer a form of partial forgiveness to lenders if the borrower defaults, as the VA guarantees a portion of the loan amount. This reduces the financial risk for lenders. Which type of loan is insured by the Federal Housing Administration to protect lenders against losses? Is it A, conventional loan, B, Federal Housing Administration, FHA loan, C, a Veterans Affairs VA loan, or D, United States Department of Agriculture, USDA loan? The answer is B, Federal Housing Administration, FHA loan. FHA loans are intended to help low to moderate income buyers by providing mortgage insurance to protect lenders, thus making it easier for borrowers to qualify for a mortgage. Which of the following is a primary benefit of a VA loan? Is it A, lower interest rates, B, no down payment required, C, no private mortgage insurance PMI required, or D, easier to qualify for? The answer is B, no down payment required. VA loans offer several significant benefits to military service members, veterans, and eligible spouses, including no down payment requirement and no need for private mortgage insurance, PMI. Loan qualifications. Which type of income must be documented when applying for a mortgage in Illinois? Is it A, verifiable income from a job, B, undocumented cash income, C, expected future earnings, or D, gifts from family members? The answer is A, verifiable income from a job. Lenders require verifiable sources of income to assess an applicant's ability to repay the loan. Documentation often includes pay stubs, tax returns, and employment verifications. Which credit score is generally considered the minimum for qualifying for a conventional mortgage loan in Illinois? Is it A, 500, B, 640, C, 700, or D, 750? The answer is B, 640. The minimum credit score for conventional loans is usually around 640, though some lenders may have different criteria. Credit scores are crucial in determining borrower eligibility and loan terms. What is a common acceptable debt-to-income DTI ratio for mortgage qualification? Is it A, 10%, B, 28%, C, 50%, or D, 70%? The answer is B, 28%. A common DI ratio standard is 28% for front-end housing expenses and up to 36 to 43% for back-end total monthly debt, depending on the lender and loan type. Which of the following items would likely disqualify an applicant from receiving a mortgage? Is it A, high monthly car payment, B, high credit score, C, verified employment, or D, sufficient funds for down payment? The answer is A, high monthly car payment. Recurring high debts, such as large car payments, can increase an applicant's DTI ratio, making it more difficult to qualify for a mortgage. What documentation is typically required to verify an applicant's employment status for a mortgage in Illinois? Is it A, credit card statements, B, utility bills, C, pay stubs and employment verification letter, or D, shopping receipts? The answer is C, pay stubs and employment verification letter. Verification of employment status typically includes providing recent pay stubs and an employment verification letter. This allows lenders to confirm stable and adequate income sources for mortgage eligibility. Which document is typically required to prove an applicant's residency status when applying for a mortgage in Illinois? Is it A, birth certificate, B, current utility bill, C, medical records, or D, social security card? The answer is B, current utility bill. A current utility bill is often used to verify an applicant's residency status because it shows the individual's name and address, providing proof of residency. The loan application process. Which document is primarily used to provide detailed financial information about the borrower during the loan application process? Is it A, credit report, B, mortgage note, C, loan estimate, or D, loan application? The answer is D, loan application. The loan application, typically completed using a Uniform Residential Loan Application (URLA) form, collects detailed financial information about the borrower necessary for assessing loan eligibility. What is included in the borrower's debt-to-income (DTI) ratio calculation during the loan application process? Is it A, monthly housing expenses and gross monthly income, B, loan amount and interest rate, C, closing costs and down payment, or D, property value and loan-to-value ratio? The answer is A, monthly housing expenses and gross monthly income. The debt-to-income (DTI) ratio is calculated by dividing total monthly housing expenses by gross monthly income, reflecting the borrower's ability to make monthly mortgage payments. What is the purpose of a pre-approval letter in the loan application process? Is it A, guarantees a loan to the borrower, B, gives the borrower an official loan amount, C, demonstrates the borrower's qualification to potential sellers, or D, finalizes the interest rate for the loan? The answer is C, demonstrates the borrower's qualification to potential sellers. A pre-approval letter from a lender shows sellers the borrower has been reviewed preliminarily and is likely to qualify for a mortgage, making the offer more attractive for acceptance. Why is verifying employment an essential step in the loan application process? Is it A, to check the borrower's job satisfaction, B, to confirm the borrower's steady income for loan repayment, C, to determine the borrower's ability to negotiate a loan, or D, to evaluate the borrower's financial education? The answer is B, to confirm the borrower's steady income for loan repayment. Lenders verify employment to ensure the borrower has stable and sufficient income to meet the monthly mortgage payments, reducing the risk of default on the loan. Which of the following is typically reviewed to assess the borrower's creditworthiness during the loan application process? Is it A, inspection report, B, title report, C, credit score, or D, property appraisal? The answer is C, Credit score. A borrower's credit score, derived from their credit history, provides insight into their ability to manage debt and indicates the likelihood of repaying the loan on time. What is the primary purpose of obtaining a credit report during the loan application process? Is it A, to verify the borrower's employment history, B, to determine the collateral value of the property, C, to assess the borrower's creditworthiness, or D, to establish the borrower's income level? The answer is C, to assess the borrower's creditworthiness. A credit report is crucial for assessing a borrower's creditworthiness. It provides lenders with detailed information on credit history, current debts, and payment habits, which are essential for evaluating loan risk. Why might a borrower be required to provide a signed authorization form during the loan application process? Is it A, to allow the lender to disclose loan terms to real estate agents, B, to permit the lender to verify financial and employment information, C, to agree to the loan interest rate, or D, to confirm the borrower's identity? The answer is B, to permit the lender to verify financial and employment information. A signed authorization form is used in the loan application process to allow the lender to verify financial and employment information through external sources, ensuring the accuracy and validity of the application details. Underwriting. What is the primary purpose of a loan underwriter in Illinois real estate? Is it A, to approve or deny loan applications, B, to assess the risk associated with a loan, C, to provide post-loan support to borrowers, or D, to handle the documentation required for the loan? The answer is B, to assess the risk associated with a loan. The primary purpose of a loan underwriter in Illinois real estate is to assess the risk associated with a loan to ensure the lender is making a sound financial decision. Which factor is not typically considered by an underwriter during the loan process? Is it A, employment history and stability, B, borrower's credit score, C, property's location, or D, borrower's education level? The answer is D, borrower's education level. Underwriters analyze employment history, credit score, and property location, but do not generally consider a borrower's education level when underwriting a loan. What is debt-to-income TI ratio used for in the underwriting process? Is it A, to determine the loan amount that can be approved, B, to evaluate the property's market value, C, to assess the borrower's ability to manage monthly payments, or D, to calculate the required down payment? The answer is C, to assess the borrower's ability to manage monthly payments. The debt-to-income DTI ratio is used by underwriters to assess whether a borrower can manage monthly loan payments alongside their other debt obligations, a critical aspect of determining loan approval. How does an underwriter determine the loan-to-value LTV ratio in Illinois real estate transactions? Is it A, by dividing the loan amount by the borrower's annual income, B, by dividing the loan amount by the property's appraised value, C, by assessing the total assets of the borrower, or D, by evaluating market trends for similar properties? The answer is B, by dividing the loan amount by the property's appraised value. The loan-to-value LTV ratio is determined by dividing the loan amount by the property's appraised value. This ratio helps underwriters assess the risk associated with the loan. Why is the verification of employment important in the real estate underwriting process? Is it A, it ensures the borrower has a stable income source, B, it checks the borrower's creditworthiness, C, it appraises the property's current value, or D, it estimates the future market value of the property? The answer is A, it ensures the borrower has a stable income source. Verification of employment, VOE, is crucial as it confirms that the borrower has a stable income source, which directly impacts their ability to make consistent loan payments and reduces lender risk. What does an underwriter typically assess in Illinois real estate transactions to determine a borrower's risk? Is it A, credit history, B, property location, C, market trends, or D, local crime rates? The answer is A, credit history. Underwriters evaluate factors like credit history, income, and employment to assess the risk of lending to a borrower. This ensures that they lend to individuals who have a high likelihood of repaying the loan. What documentation is required to verify a borrower's income during the underwriting process in Illinois real estate? Is it A, past tax returns, B, school transcripts, C, utility bills, or D, credit card statements? The answer is A, past tax returns. To verify income, underwriters typically request past tax returns, pay stubs, or bank statements. These documents help confirm the borrower's income stability and ability to repay the loan in compliance with Illinois real estate regulations. Loan closing. What is the primary function of the Real Estate Settlement Procedures Act, RESPA, during loan closing? Is it A, to regulate fair housing practices, B, to ensure that borrowers are informed about the cost of closing before they finalize the real estate transaction, C, to manage property appraisals, or D, to enforce zoning laws? The answer is B, to ensure that borrowers are informed about the cost of closing before they finalize the real estate transaction. The Real Estate Settlement Procedures Act, RESPA, ensures that borrowers receive disclosures about the costs of the mortgage process, helping them make informed decisions regarding their real estate transactions. What document is used to itemize the services and fees charged to a borrower by a lender or broker when applying for a loan to purchase or refinance real estate? Is it A, the good faith estimate, B, the closing disclosure, C, the loan application, or D, the deed of trust? The answer is B, the closing disclosure. The closing disclosure is the document that itemizes all services and fees in the mortgage process, replacing the HUD-1 settlement statement for most loan types under the TILA-RESPA integrated disclosure rule. In Illinois, who is responsible for recording the real estate deed after the closing? Is it A, the buyer, B, the title company or closing agent, C, the mortgage lender, or D, the seller? The answer is B, the title company or closing agent. In Illinois, the responsibility of recording the real estate deed usually falls on the title company or closing agent, ensuring legal transfer of property ownership is documented. What is the purpose of escrow in a real estate transaction? Is it A, to transfer property ownership instantly, B, to hold funds and documents until all terms of the sale are met, C, to assess property value, or D, to negotiate loan terms? The answer is B, to hold funds and documents until all terms of the sale are met. Escrow is designed to ensure that all terms of the real estate transaction are met by holding funds and documents securely until closing conditions are satisfied and the property can be legally transferred. Which document provides a detailed accounting of final closing costs and funds received and disbursed during a real estate transaction? Is it A, the HUD-1 settlement statement, B, the closing disclosure, C, the purchase agreement, or D, the deed? The answer is B, the closing disclosure. The closing disclosure itemizes final closing costs and details the funds received and disbursed. It replaced the HUD-1 settlement statement for many loan types as part of the TILA-RESPA integrated disclosure rule. What role does the closing disclosure play in an Illinois real estate transaction? Is it A, it ensures that the borrower understands the loan terms, B, It provides a summary of the title search results. C. It outlines all costs and payments made during the closing process. Or D. It approves the loan for the borrower. The answer is C. It outlines all costs and payments made during the closing process. The closing disclosure provides a thorough accounting of the final costs associated with a loan for a property purchase, including a breakdown of payments made and received, ensuring transparency in the closing process. Who typically oversees the escrow process in Illinois real estate transactions? Is it A, the seller, B, the buyer's attorney, C, the closing agent or title company, or D, the mortgage lender? The answer is C, the closing agent or title company. In Illinois, the escrow process is typically overseen by the closing agent or a title company, which ensures that all terms of the purchase agreement are satisfied before funds are dispersed. Illinois mortgage disclosure requirements. What key document must be provided to buyers in Illinois to disclose information about their mortgage loan? Is it A, good faith estimate, B, loan estimate, C, closing disclosure, or D, HUD-1 settlement statement? The answer is B, loan estimate. The loan estimate must be provided within 3 business days of receiving a loan application and discloses key information about the mortgage loan as mandated by the TILA-RESPA Integrated Disclosure Rule. Which law requires Illinois mortgage lenders to provide a cooperating disclosure about the annual percentage rate, APR, to borrowers? Is it A, the Truth in Lending Act, TILA, B, Real Estate Settlement Procedures Act, RESPA, C, Dodd-Frank Act, or D, Illinois Mortgage Disclosure Act? The answer is A, the Truth in Lending Act, TILA. The Truth in Lending Act, TILA, requires lenders to provide a clear disclosure of the annual percentage rate, APR, to ensure that borrowers understand the true cost of their loans. How many business days do Illinois mortgage lenders have to provide the closing disclosure before closing the loan? Is it A, 1 business day, B, 3 business days, C, 7 business days, or D, 10 business days? The answer is B, 3 business days. The closing disclosure must be provided to borrowers at least 3 business days before the closing of the loan, ensuring they have time to review the final terms and costs. Who is primarily responsible for ensuring buyers receive the loan estimate within the required 3 business days in Illinois? Is it A, real estate broker, B, mortgage lender, C, title company, or D, appraiser? The answer is B, mortgage lender. The mortgage lender is responsible for ensuring that the loan estimate is provided to the borrower within the required 3 business days of receiving the loan application. According to Illinois mortgage disclosure requirements, what must be provided to the borrower at least 3 days before the scheduled closing date? Is it A, purchase agreement, B, loan estimate, C, closing disclosure, or D, deed? The answer is C, closing disclosure. The closing disclosure outlines the final terms and costs of the loan and must be provided to the borrower at least 3 days before the scheduled closing date to ensure they have sufficient time to review. What document must Illinois mortgage lenders provide to borrowers that details the total payment over the loan term? Is it A, amortization statement, B, closing disclosure, C, loan estimate, or D, good faith estimate? The answer is C, loan estimate. The loan estimate must detail the estimated total payments over the life of the loan as per the Truth in Lending Act, TILA, and Real Estate Settlement Procedures Act, RESPA, Integrated Disclosure Rule, TRID. Who is required to provide the closing disclosure to the borrower in Illinois? Is it A, the home inspector, B, the real estate agent, C, the mortgage lender or creditor, or D, the title company? The answer is C, the mortgage lender or creditor. Under TRID rules, the mortgage lender or creditor must provide the closing disclosure at least 3 business days before the closing date to ensure the borrower understands the final terms and costs.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit birdsey.ai for complimentary study sessions with Birdsey, your AI-powered study partner.